So, Frank, something we had a good question in the audience from Julian. Julian says, "Do you think using COT data or retail sentiment is more useful for trading?" And I'll let you answer first, then I'll add my comment. What do you think about that? Do you COT data or retail sentiment more useful?
Well, personally, I do use COT, but they kind of go hand in hand in a way, um, in regards to how they just are exact opposites for the most part. So if you read one strong sentiment on the retail side, it probably means the opposite sentiment from smart money. So either way, I think retail is usually wrong, and they're probably from what I've noticed is that they're like usually in these moves too early. Like they're always trying to trade reversals. If things move too high too quickly, they want to get in on like a pullback and see things come down, and vice versa. But that's not always the case because smart money has large amounts of cash flows that take like longer periods of time to move and set price. So higher highs doesn't mean you're gonna top out and come back. It oftentimes means like there's an uptrend or a downtrend that's looking to continue, and so COT is very helpful in pinpointing where the direction of a certain assets can go.
What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half-off discount sale.
Oh, that's right, I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals, where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now.
Yeah, no, that's a good way of putting it. And I think, to your point about sometimes they contradict one another, I've got an interesting example for that. So right now, what we can see here is I've got the COT Smart Money Tracker page opened up, and I've isolated just gold for this example. So Julian, to answer your question, I think Frank did a good job. He kind of cross-examined the two, and this is what we often do. This is why in the EDGEFINDER you can find both of these things, is you have smart money data and you have retail or dumb money data as well. So if we take a look at gold right now, it's a very interesting dynamic. You have institutional money, which has been for a while now very much on the long side. It seems like they've been building a big position on the gold market on the long side. And then you take a look at the exact same time right now, we pull up this data on retail traders, and we see retail traders are 70% short. Now, this is client positioning that we pull from brokerage positioning. So we can see that retail traders' current positions right now, as of the latest data, are 70% on the short side. So contradicting one another, big money is long gold, dumb money, retail money is short gold. Now, I want to clarify that if you're a retail trader right now and you are short gold, it does not necessarily mean that your trade cannot possibly go into profit, right? Sometimes people get this mixed up. I'm not insulting anybody. If you're a retail trader with a short on right now, maybe you have a perfectly good reason to do so in your strategy. These indicators that we're pulling up, Smart Money Tracker, retail sentiment, they're not magic, perfect systems. There are plenty of times where gold right now could continue to go lower, despite big money being long, retail traders being short. Sometimes retail traders are on the right side of the trade. It's just that we usually see that pattern, favor big money. And so that's why we track it. And within the watch list signals tab, this is why when you go to this tab and you take a look at gold, what you can see here is that when we calculate the scoring here for our system, COT bias shows positive and retail sentiment also shows positive, meaning both of these are bullish indicators right now, because COT, big money, is long gold, and retail traders are bearish, which for us is actually a bullish signal. I know that can be a little bit confusing to people who are newer to the EDGEFINDER, but again, if retail traders are very short, we view it as a bullish signal, which is why in our scoring system, we give it a positive score. So if I'm looking at this, if I'm talking COT retail sentiment, I'm kind of looking at it as a both of them matter to a degree to see which one is kind of weighing up and how are each one positioned, if that makes sense.
What I did not like about CPI is core CPI was still very, like, it was not changing. The other ones, at least they did slow down, but it was still around 4%, I guess. So that is something that actually made them to say the inflation is still persisting and there is a room actually to increase the rates. And twice, that's the thing, twice this year. And if we check, we just left with maybe 5 months or something like that. So it means it's very, very close. So, but I think the market is already pricing into that. So I think we're going to see some sort of bullish momentum, but because we already know what might happen, you see.
So when you say bullish momentum, do you mean bullish momentum for indices, or do you mean for the dollar?
Oh no, sorry. For the indices, I will be talking about maybe, let's say, US 30, Nasdaq, S&P 500, also gold. I'm just waiting for gold maybe to break the resistance. I think we will see it pushing to the upside. It's been struggling a little bit, but I think we will see sort of some bullish momentum.
Yeah, fair enough. Yeah, no, and I think it's an interesting reaction to everything, Kenzo, because I was trying to make sense of it all, in the sense, the Fed, as you mentioned, in commentary was relatively hawkish. You had the Fed come out and say, more rate hikes are expected. We pretty much universally agree that no more cuts or no cuts are coming this year. They don't see that on the horizon. And so there was some commentary that was relatively hawkish from the Fed. Despite that, though, the markets absolutely took off. We saw, the S&P 500 blip around on Fed Day, but have since rallied from there. I'll give you my take, Kenzo, real quick on the S&P. I am bullish. Companies doing quite well. Forward projections look great. The economy is still strong. And now we kind of have sort of a cap, at least from the Fed, for how far they think rates are going to go. Now, of course, nobody knows the future, and they might change things as we sail upon this kind of sea together. But I think that, generally speaking, the market might be saying, hey, we now know the downside risks, and there seems to be a lot more upside potential. So it's an interesting dynamic. However, my take on it is I've got to see pullbacks, and I might miss some of the moves here. Now, of course, I've been pretty long biased on indices. I think you and I have both been pretty long biased on indices. But the question will be, is the Fed kind of just, someone said in the chat, Jerome is bluffing. Is that possible that, maybe he's just, staying on the side of caution? Are you a buyer up in these prices? Are you looking for pullbacks? Are you even bearish? What do you think? S&P specifically.
Yeah, actually, I think you're right when you say maybe Powell is bluffing, because you can't pause now and say, why don't they just increase now, you see? So I think obviously he doesn't just want to go out and say, guys, traders, now it's time to buy. You can't say that. So you have to have a mixed message. And we're going to actually analyze that and actually understand, okay, if things are like this, obviously we're going to go this way, because we can easily see that even though inflation is not seriously going that lower very quick, but it's exactly cooling down. So which means actually the rates might not actually go up, because he said they are controlled by the data. And on our side, we can easily see the data that, okay, the data is going down, which means if we already get the same data next month, it means they're not going to increase the rates. So actually, it can't hey, guys, things, as we can easily see that the inflation is going down, which means if it keeps going down, they're not going to increase the rates. But you can't just say, yes, do this, because the market will react to that, and that is not actually good, because it's someone who is in the Fed. So you can't just say, yes, we're going to do this and that, then the market will easily buy or crash if maybe it's bad, you see. So here I have to be 50-50. That's why at the end of the day, the market is not going to spike up or down. We're just going to dissect everything. That's why after an hour or 2 hours, the market starts to take a certain direction, which means we start to understand that, okay, it means we're going to go bullish. And we can see also on S&P 500, the market did the same. The market is starting to push the upside. Today, I saw USD also trying to break that resistance. You can see we have, if I go on a daily time frame, you will see that we actually have a resistance which has been like seriously strong, and today the market actually pushed above that. So you can easily see that the market doesn't really care much about whatever he said. It's like we know what you were trying to say. Obviously, you can just say, guys, go buy, but we know that we no longer have that problem of inflation. You see, inflation is getting lower, so now we just focus on other things, and those things is to buy more. You see.
Yeah, no, good points. Because I think that's one thing. Sometimes people are you have to be careful when you listen to Jerome Powell. I say this often. If you are in his shoes, it's like you're saying, you can't just go out and say everything looks good, time to buy. Like, you'll never say that, because in that role, your job is to be defensive and cautious and defend the consumer kind of thing. That's at least how it's supposed to be. So very much important. We just had breaking news, by the way. Sorry, I missed it today. We do have, in fact, let me make sure we get this number updated. So we just had preliminary UOM consumer sentiment came out higher than expected, 63.9 here, which of course, if you guys are unfamiliar with what this is, it is financial confidence, leading indicator of consumer spending, which accounts for majority of overall economic activity. So we had a green number here, higher than expected. So let's see, how is that impacting in terms of consumer spending? It's an interesting one. You have the dollar here. Pull up the hourly chart for a moment. Trending down just a bit, not too much volatility there. However, seems like we just had a bit of a bump on equities, just slightly. NAS 100. Not really too much to mention there. But of course, let's see, that 15-minute chart had just a shoot down just towards the very end. Let me actually go 1 minute, see where that spike occurred. Okay, no, it's just kind of a trailing from the open down just a little bit here for the NASDAQ. So I would say not too eventful of a news event here this morning. UOM consumer sentiment came out slightly higher, 63.9. So yeah, it's just another piece of information. I feel like the market, though, and feel free to differ from me if you think so, Kenzo, but I feel like the market is just still very, very hyper focused on all the stuff that we got this week and still digesting what we got from the Fed.
Yeah, I think gold, you can check gold there. It's the one which is making some nice moves. I think it was trying to break that resistance there. After those news, I'm hoping that maybe we might see a breakout. Maybe that breakout will happen. But yeah, it's something that maybe we can just wait a little bit and see if maybe it happens or not. But it seems to be very strong. I'm expecting just to wait and see if maybe it happens, because I think gold is going to give us some very nice moves. I think it's a bit delayed. Whatever that is happening here has been delayed, but we know that few weeks or few days we will find gold somewhere very high, obviously.
Yep. And I think you bring your attention to gold. I'm kind of there with you too. I think for me, indices, S&P and gold, probably my two favorite things that I like to trade. And gold's been, of the two, the more boring one recently for me, just very stuck in a range. S&P has been great, but now it's at a point where, I'm a buyer, but I've got to be a buyer on a pullback. However, like you mentioned, gold is at a very interesting spot. It's at a very close to execution spot for me, where if we're able to get some sort of break of this 1965 area, we clear the 1970 area, I'm going to be looking for pullbacks, because I do think that things lend to bullishness on gold. I just need to see price action kind of agree. And we've talked about this here just before you stepped on the show. We were talking about gold, and a couple key contributing factors that I think are worth noting is that, you do still have high levels of inflation. This, of course, generally is an environment in which gold does pretty well. We also have COT data, which shows that big money is very positioned on the long side of this trade. Despite recently it kind of consolidating, big money seems to have been building a big position on the long side. Retail is very short. So you have all these kind of contributing factors that lend bullish. You also have June and July both expected seasonally to be upward months for the gold market. And so I think the risk to reward for me on gold is especially good if we can get the breakouts, retests kind of concepts that you're talking about there, Kenzo. So walk us through, for you, gold trade. Do you have one in mind, and how would you enter a gold trade if you could find one?
Since if I go, let me go maybe on a daily time frame. On a daily time frame, we can easily see that the market is way too closer to our support area. So if I go closer again on 4 hours time frame, you will see that these areas, they are playing around this zone. Actually, someone who actually trades like swing trading, they will call this as the same area as a support area. So my job is to wait for a breakout. As long as the market is going to break out of this resistance, that is going to be my first trades going longer. So from here, I will be waiting for the market to see if maybe it's going to break this level. We also have another level around this area. I think it's 960. I don't know if it's 9 something. So that is also another zone that I will be checking. But if we get out of this, that is a clue that, okay, guys, I'm ready to push the upside. This area might actually reverse a little bit, but I will be expecting the market to continue pushing to the upside. Especially when we had all the news along the way, but all those news, they were unable to break our support level. So which means this area is very strong. So we're just waiting for the market to continue. Unfortunately, the market won't just make things easier for us, and it will just wait. Maybe later on it might break when we forgot. So it's better, let me just place a notification here. So when it breaks, I will get that, you see.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.